Traders at UBA said Nigeria's FX market is still tight on supply, but the central bank has been consistent in its weekly supply, and a huge disparity is expected to continue for now as export proceeds are yet to pick up. Bankole Odusanya, head of fixed income trading at UBA, joins me for more on today's conversation. Bankole, thank you for joining us. Let's get right to it, starting with the NTB results from Wednesday. And the results showed significant demand for securities despite the low yields at the market. How is this playing out at the secondary market? One, and second question, I'm just wondering, you and I have talked in the past about how low yields can go and the extent to which investors will accept them. But I suppose we're already in that environment where investors perhaps no longer have that choice.
Well, thank you, Deborah. From all indicators, the demand is still very, very high for securities, even at these low levels. We saw a sustained demand at the secondary market even before that NTB auction that held on Wednesday. This was because OMO yields in the secondary market had dropped to 2.5 on the long year, that's 1 year tenor. So we saw demand move from OMO securities that were trading in the secondary market up then to the NTB auction, where they successfully dragged down the yields to 2.8% and 20 basis point drop. Also, we noticed on 180 days and 91 days. This simply means that there's still room for further drop in yield. This is not just driven by demand because of returns on investment, but because of statutory requirements of some players in the market, like PFAs. They are required to put a certain percentage of their funds in risk-free assets. So they've been taking advantage of bonds market and then have to buy some Nigerian Treasury bills, since they are not allowed to buy OMO from the auctions as local corporates. So what we're experiencing is a shortage of security from the debt management office compared to the demand outstanding from OMO maturities that we receive every week, sometimes up to 300 to 400 billion in naira. What we have been seeing by way of issuance, fresh issuance from the DMO, ranges from 100 to 130 billion in treasury bills for every 2 weeks, and then for bonds, we see 140 billion offered every month. At the last bond auction, what we saw was a sale of just about 106, even though there was a 320 billion demand for securities. So basically, security demand exceeds supply. And to your second question, as to whether we have found a bottom in yields, no, we have not found the bottom. Because of the statutory requirements I spoke about, some large fund holders in this market will continue buying, even if it drops to sub 1% level.
Wow. Okay, let's move over to the fiscal space now. The federal government is proposing 13 trillion naira for its 2021 expenditure budget. Now, this is up from 10.5 trillion from 2020 deficit. Budget deficit is proposed at 4.5 trillion. How much do you think, because obviously the government has to go borrowing, both from the domestic market and I suppose also foreign sources, how much do you foresee the government borrowing from the domestic market, and could we be looking at another Eurobond issue for foreign borrowing?
Thank you very much. With the deficit of 4.5 trillion, definitely the government will be borrowing. So that question is answered. As to where the borrowing will be coming from, whether it's local or foreign, it looks more like it would be domestic borrowing, given the cost of debt issuance that we have seen this year, given COVID and the post-COVID era, and how the central bank has managed OMO issuance and limitation of securities issuance. This has caused scarcity in debt instruments, which has pushed down yields. So if 2026 bonds are trading at 5%, and 2035, 2045, and 2050 FGM bonds are at 8%, it pays the DMO to raise funds locally rather than to go for Euro bonds, which could be priced at double digits, simply because crude oil, which is the mainstay of Nigeria's economy, revenue has dwindled and reduced so much. We expect that the pricing and risk factor, given our FX challenges as we are going through presently could make investors price Nigerian Euro bonds fresh issues at double digits, as high as 10%. So we are envisaging and expecting that domestic debt will be used more in 2021, given the lower cost of raising such instruments. That is what we expect the DMO to do and take advantage. But it also depends largely on the situation of the FX post-COVID.
Okay, Bankole, I wanted to take you to the FX market now. I'd like you to just share some of your key takeaways from how things are playing out. We're seeing tight supply, despite the fact that the CBN has been consistent with its weekly FX supply to BDCs. What are your key takeaways from how the market is progressing?
To a large extent, the CBN has been consistent in its own supply, and they continue to ensure that the right customers are getting the dollars on offer, and to ensure that the middlemen are cut off. Going forward, we expect that as markets begin to open up, we'll see some proceeds from exports, even though the figures are still low, given the global economic crisis we all went through based on COVID. But we expect that things will start picking up. This is the last quarter of the year, and basically most firms, private and public, are already looking at first quarter next year. So we are expecting that production is going to kick off. We're expecting that there will be some, increased demand for crude oil, even though most of the negative news coming in on the dollar pushed crude oil price further down today. But we are just being optimistic and hoping that as the markets open up globally, export proceeds will be able to rise up, and then we'll be able to meet demand.